Hey guys, Akil Stokes here, Forex trader, trading coach, and co-founder of Tier1Trading.com, and welcome back to another episode of the Weekend Trading Edge. This is a weekly video that I do here either on Saturdays or Sundays, looking at the markets, sharing with you my top 3 trading ideas that are on my radar for the week to come. If you are brand new to the channel, welcome. Hope you enjoy it. There are thousands of videos here for you to check out, lots and lots of free trading lessons. So do me a favor, hit that subscribe button. Also hit that notification bell. That way you don't miss my next upload. I do a lot of live streams throughout the week that you can check out. And if you are a frequent viewer of the channel, thank you for your support. If you haven't done so already, make sure you support Jason Greystone and myself's new channel, The Trader Coffee Break, where we're teaching you different lessons throughout the week based on what you guys want to hear about. Think of it like water cooler talk. So it's nothing planned. We just come in and shoot the you-know-what. But valuable lessons, and I recommend watching from the very beginning, the first episode, how to get into trading, and then working your way up through the most recent one. Now, today, again, we're going to kind of get straight into it. No psychological lesson. We're going to hit the charts, and we're going to start on the pound dollar here on the daily. Now, very hard week to look for trading ideas, right? I wasn't here Friday. I was up in New York City, but the war news came out. The markets went crazy. Some more news came out Saturday, kind of walking that back. So I have no idea what to expect here on the open. We may see a complete reversal of what we saw on Friday. We may see a continuation. Whenever there is high impact fundamental news announcements, right? Just like a CPI report or an interest rate increase, the best thing you can do is stay away until the smoke clears. So that's what I recommend here. I probably won't be making any real analysis until Monday evening, Tuesday morning. That's typically when I do it anyway, after the first full London and New York session. But just a little bit of extra warning for this week. Don't try to get cute and open and jump on the open, because there may be some funky stuff that happens. But I got to get you guys a video, so I'm going to try and find you something. And we're going to start here on the pound dollar daily chart, right? So we came off a very nice cipher early last week on the pound dollar. Actually, I think it was 2 weeks ago. Anyway, you can see it here in your chart. We came off a cipher. Very nice win there. That was down on a lower time frame. Here on the daily, right, we're coming into another potential pattern formation as well. Now, it's really early, and that's why this is only trade number 3. But like I said, there's not a lot that I really want to touch on out there, because I don't want to give you guys I don't want to give you guys something just to give you something. Let's put it like that. But you can see we have 3 points of a potential pattern completed already, right? This initial leg right here is going to be called our X to A leg. Now, this is a good example of an anchor leg, right? This leg is not an extension, right? As is this one right here, if you can imagine, if my thing isn't confusing you. This is a retracement leg, but these are still perfectly fine to use as your X to A legs in pattern formations. I know on the platform we always talk about, you know, the impulse leg is going to be the easier one to identify. So if you're new to trading, if you're just learning about harmonic patterns, I would recommend going with those, because they're probably going to stand out to the eye a little bit more. But there is nothing invalid about these. These are perfectly fine. So if you see these outside of returns as perfectly clear directional swings, feel free to use them. So we have point 1, which is going to be our X to our A. That's our swing low to swing high. Leg 2 is going to be our A to the B, our retracement right here. Our retracement comes to our 618 retracement, which puts us on Gartley pattern alert. I got the question the other day about, it was a trader who was confused about these things. And I always go back to rules-based trading, right? When you have rules, it eliminates all of the confusion. You can either do something or you can't do something. And when it comes to patterns, and specifically, right, that B leg, what retracement level that B leg hits will tell you what pattern to be on alert for. So if it comes to a certain level, it can only be this. If it comes to another level, it can only be that. If it comes to this level, then that is violated. It can only be this. If you have that literally written down in you know, a word format, on a piece of paper, on the back of your wall, however you tend to do things, it eliminates a lot of the confusion, because you're no longer looking at something and wondering, is it this, is it that, is it this, or is it that? Following your rules will tell you that. So we have leg 1, swing low to swing high. Leg 2, our first retracement right here. We then have a secondary retracement, so a retracement within a retracement, as you can imagine. And you can see that comes to another 618 retracement. So this is going to put us on alert for a Gartley pattern, and that Gartley should complete the final leg a little bit under this 786, right? This is how ratios work. I'll actually draw a 127 Fibonacci extension from my A leg to my B leg, right? The extreme, so the tip of the wick to the tip of the wick. And you can see that 127 is going to come right down here. So if price action were to push down to this level here on the pound dollar, we are going to have a potential bullish Gartley pattern. So this is a buying opportunity. Now this box here, this is going to be your zone. So the top of that box is going to be the beginning of the completion pattern. On the bottom of that box is going to be the end of it. So if price pushes past the bottom of that box, the pattern is going to be invalidated. And of course, if we look left, we just stretch this out, structure leaves clues. This comes at a nice previous level of consolidation as well. So again, a far ways off on this one, but it's tough sledding out there as far as finding ideas. But if we can push down here, then we can look to trade it back up. All right, trading idea number 2 is going to come on the NASDAQ. And this is going to be very similar, but in a different way, right? We just had a cipher that could potentially lead into a Gartley. Now we had another completed cipher here on the NASDAQ, opposite direction. And we're consolidating once again, and we may have another Gartley pattern, right? So a beautiful cipher right here. Hats off to all you guys that took that and made some money off of it. Cool stuff. The market did not get our follow through up, right? We tried to retrace and then we kind of ran out of steam, and we're pushing back down into that previous level of support where our D leg initially reversed. And if we go down to, you can see this on the daily, see if it's a lower time frame as well. Let's go down to a lower time frame, right? You can see the same type of M-type setup here, right? Where the market puts in these multiple legs, right? The market puts in a move up, the market puts in a move down, the market puts in a move up, the market puts in a move down. And again, to most people, this looks like complete junk. But if you are armed with this type of knowledge, right, these tools, right, you can make a lot of sense out of these junks and out of this junk. And these periods of consolidation that look like this, where in the past, it's like, oh, there's nothing I can do here. I just got to wait like 4 years before ever taking a trade again. These periods of consolidation can offer pretty decent trading opportunities. And we talked about, we talked a little bit in this past week's coffee break episode about multiple accounts. Like, why would you want to trade with multiple accounts? Is it a good thing? Is it a bad thing? We laid out some of the pros and cons. And in general, we talk a lot about diversification as a trader, right? When I first started trading, I was under the impression, I did a lot of young and dumb stuff, and hats off to me. I was very stubborn. I had a very fixed mindset, and a lot of my thoughts that I've had in the past have now changed. And you'll see some people that look at that as hypocritical, where you'll look at a video from mine from 6 years ago and be like, "Oh, Keel, you said something completely different. You're a hypocrite." I don't see it that way. I see it as being open to growth, right? I am on the learning journey just like you guys, right? I don't believe that the learning journey ever ends, right? And I'm not egotistic enough to I'm not afraid to admit when I'm wrong or be open to exploring new things. So if you're someone that's like that, right, just because you have a set way of thinking, it's not a bad thing if something ever kind of sparks an idea, sparks you to do some research on a different way of thinking and you change your mind. That is part of growing, right? The goal should be to get to the best answer. It's not to be the person that I'm right, you're wrong. It's to get to the best answer. And when I first started trading, I was under the impression that, and I would preach, you find one thing and trade just one strategy, right? My mentor taught me one strategy, one time frame, one pair. That's all you need, right? And then expand from there. But over the years, I've come to really see the power of diversification, right? Not just in kind of leveling out your equity curve, but in frequency of trading opportunity, right? If you're a trend trader only, especially in the Forex market where we consolidate plenty of the time, there's going to be big stretches between trades. If you're going to be a consolidation trader only, there are going to be these directional periods where you get destroyed, right? And they cause some really big spikes and troughs in your equity curve. If you have the ability to trade different ways, to take advantage of different market conditions, if you can be a killer out there, whether the market is trending, whether the market is consolidating, you put yourself at so much more of an advantage than the average trader. So again, newer traders, start with one thing, for sure, right? Start with one thing, master that one thing. But put it in your long-term plan to eventually diversify. Like, hey, after I master this one thing and it's become a print and press for me, essentially, let's work on another thing to take advantage of the opportunities that I see, but maybe can't act on it. And pattern formations are key for that, because when we get these sloppy forms of consolidation, you can get these short little moves, and we're not trading them long term. We're looking for quick little moves up to a 3D2 retracement from the completion point, and then we're looking to get out. But they do come pretty frequently, and they can be very beneficial to your equity curve, especially when the market isn't directional and those trend continuation opportunities aren't really present. So another pattern formation up here or down here on the NASDAQ, again, same thing. You're going to see, maybe not this type of consolidation at every pattern, but you're going to see structure at every pattern. So another buying opportunity if we can push down a little bit more on the open here. Now, before we get into my top trading idea for the week to come, I want to remind you guys that we do have a 14-day risk-free trial membership available over on our website. Just head over to www.tier1trading.com, click the button that says trial membership, sign up, network with the community, involve yourself in some courses, sit in the live rooms, right? Take advantage of 14 days of education. Now, it's going to cost you $1, and we do that purposely because we found that by charging $1, it keeps the trolls away. It keeps like the people you typically see in forums or YouTube comments away, right? And that's very important to our community. But trust me, the training that you're going to get over 2 weeks for $1 is probably going to be worth more than what you would pay thousands for somewhere else. So check it out, www.tier1trading.com. 14-day risk-free trial membership. My advice is don't just sign up, but sign up and be active. Have a plan of what you're going to do so you can fully take advantage of those 14 days so that it doesn't run out before you really have a chance to do what you wanted to do and you end up right where you were before. So trading idea number one is going to be on oil, right? This is going to be, I call it a repeat offender, because basically we've been doing the same thing on oil for a very, very long time here. We've been in a very directional market here on oil. You can see some notes on before. This was our previous structure high. You guys know me by now. I'm a pullback trader when it comes to my trend continuation stuff. So once we identify a new structure high, we can predict that price is likely to continue higher. We know that if price is likely to continue higher, we can use structure to identify those points. I'll go out to a daily and touch on that in a little bit. But then my preferred style of being involved in trend continuation trades is a pullback trader. So we wait for a pullback to previous resistance, which should now act as support, and then we buy it up, right? And so the same things happen here. We've had a fresh break, right? So this was our previous new structure high. We have violated it, break and close above. Again, break and close above. So this sets us up to redo our analysis, right? New structure high. Prediction is that we can continue higher. Look for the pullback into previous resistance, now acting as support, and another continuation leg up. Now, we have come to our first zone that we were looking for was up here. So we are at a little bit of consolidation here, but I do think we can go further. If I go out to, I'm going to pop out to a weekly just so you guys can get a real view of this, right? So here's our ultimate level of consolidation. And whenever we look at these levels of consolidation, we identify kind of like strong points and like weak points. Weak points are like, if you're a very conservative trader, this is the first place we're likely to go to before danger happens. So if you want to make sure you get a little bit of profit off or maybe move those stops to break even, that's the point. And then we kind of identify the key levels, and the key levels are going to be the ultimate swings. I don't know if I'm saying ultimate today, but the highest swings. You can see this level right up here around 105, 108. So you can see there's still a lot of room to go to the upside. Not as clear as before, right? Our initial entry was right here, and we had from here to here, no problem. That was clear sailing. Not as clear, but still a significant amount of room that we can go here. So there is opportunity to the upside here on oil. Just got to wait for another pullback or maybe another consolidation and a breakout. But it's been working really, really, really good for us for a very, very long time, right? We don't need to reinvent the wheel. We don't need to do super fancy stuff here. My trading style isn't super fancy, despite what some of you guys may think. It's basically identify structure and then trade from one structure level to another structure level. Pretty much that's it. So hope you guys enjoyed the video. Hit that like button, subscribe, support what I'm doing here. Remember, a lot of stuff comes out throughout the week. We got Trading Coach Podcast. We got weekly live streams, 7:30 a.m. Tuesday, Wednesday, and Thursdays. Been having some great discussions there. So please join. Please spread the word. And remember, Trader Coffee Break, still a brand newish channel from Jason Grayson and myself, but we do go live each Wednesday at 10 a.m. New York for a little water cooler talk about a discussion point that is important to you. All right. Until next time, plan your trade your plan. Be safe out there on the open. War Talk.